Wall Street will try to screw private investors like us out of our silver positions. Be very careful what's happening in the coming weeks. Silver will go lower and it'll be the fake out of all fake outs. In today's video, I'm going to analyze the silver chart according to the Wyckoff accumulation pattern. And that tells us what will likely come in silver and how we should behave. And I'm going to give you my strategy in the end of this video and what you need to pay attention to when the Wyckoff accumulation pattern plays out. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hello, my name is Daniel Wilhelmi. Welcome to Hot Trades of the Day. It's already August. Unbelievable. I hope you're having a great summer. Lots of you asked for an analysis of the silver price through a Wyckoff accumulation pattern. I did a video for gold, analyzing gold through the Wyckoff accumulation pattern. Well, we're going to start with the technicals, and I'll keep it a little shorter because, again, as I said, while I move my ugly face up here so you can see the technicals behind the Wyckoff accumulation pattern, this graphic, really good graphic, courtesy of Kegel's Trading. I'm not going to go into it too deep. You can see it in the gold video. This is going to bore the people that have seen it. So let's do this quickly. Wyckoff accumulation and distribution patterns. Accumulation happens after a long, steep correction. Well, we certainly have that in silver. Distribution happens after a long bull run. What makes Wyckoff patterns so unique is that they are basically a pattern recognition for the behavior of the institutional money. It was developed about 100 years ago and it has stood the test of time. It works best, this is important, on the long-term time frames, so daily and weekly. I mean, I guess you can have it on a monthly, but boy, that would be the mother of all accumulation or distribution patterns if it plays out on the monthly in today's automated trading. That's pretty much history. So daily, weekly, shorter time frames, it's not as efficient because, again, remember, we're talking about this is revealing what the institutions are doing, and they need time to accumulate their positions. And what makes Wyckoff special is that this pattern shows us that the institutions, the smart money, because let's face it, a lot of institutions can also be dumb money, they are hiding their behavior. So they're selling in the distribution pattern or they're buying in the accumulation pattern. They're hiding it to a number of fake signals that you see here. So let me run through the pattern again for accumulation real quick, and then we're going to get into silver. So it starts with a sell-off that gets us down to what's called the SC, which is a selling climax. Then we get a rebound. That's normal. We make a higher low within this rally phase, a higher high, okay? And then, this is the important part, we make a lower low. It's called ST in phase B here in the graphic in the middle. So now, all of a sudden, this triggers obviously all the selling, all the bearishness. We go up, but we do not make a higher high. We actually make a lower high. This is important because this is basically the confirmation to all the dumb money that, oh my God, the rally is over. And then the price even drifts lower and they're selling. And then comes the neck breaker. We get an undercut. We make a final sell-off where the smart money is going to trigger all the stops, all the leveraged positions is going to get liquidated, all the margin calls are coming on. Ring, ring, we want our money back. And that's the ultimate panic move. And they are just buying up, in this case, all the silver. And that's it. After this, as you can see here in phase 3, the market starts to turn. We move up, we get a retest where we do not make a new low. So we make a higher low. It's called test here. It's a retest of a support zone. I mean, it's classic. And then the party starts and we're moving up. So that is the Wyckoff accumulation pattern. Again, the most important part, it shows us what the institutions are doing. It hides their behavior to Main Street through numerous false signals. Now, let's look at silver and we're going to walk through all this. So as you can see here real quick, because we have all these letters here, looks like a fraternity row in college. So it starts with a PS, that's called the preliminary support. So we get a sell-off, we hit a support zone, we get a jump, and everybody's like, woohoo, okay, we hit the support, and then we make a lower low. And that is already leading to negative sentiment. So that ends in the selling climax. Then we get the rebound rally, which is called AR in Wyckoff, which stands for automatic rally. And then what's really important is the ST in phase B here, pretty much in the middle of the chart. That is the secondary test, and then the spring, which is the undercut in phase 3, and then the retest. Now, remember that every zigzag that you see here in the chart, the micro moves, they are not that important. What is important with Wyckoff are the endpoints, right? So the SC, the AR, then the ST in phase B, which is actually lower than the SC, fake signal, then the rally that is actually does not make a new high. So it's lower than the AR. Fake signal telling the market, no, there's nothing happening in silver. It's dead. I should sell my silver or my stocks or my FX, wherever this pattern is developing. And then obviously the ultimate fake out of all fake outs, the undercut that below the ST and phase B that leads to the spring. So let's jump into silver and look where we stand. Well, we can certainly say we got a sell-off, that's for sure. Now let's look more into it. And let's get to it. There we go. And I can actually move my picture back down here. Very nice. There we go. And off we are. So we don't need to talk about the sell-off. We all seen the sell-off. So as you can see in the chart very clearly, perfect preliminary support. And this is the interesting difference between gold and silver, that actually we know that silver is more volatile than gold. So the moves in silver will always be more extreme than in gold. So the signals are actually more clear in silver, the Wyckoff signals, as they are in gold, which is nice for us. So we have the overall downtrend. We started building out this downtrend channel. I've talked about it in previous videos. In the middle of May, and the sell-off in this channel led us to this preliminary support, which was the lower end of the channel, makes sense, and this Fibonacci extension. Perfect, absolutely perfect for preliminary support that makes sense for all the investors. We get the rally to the upper end of the channel. Look how perfectly this is doinking off this double resistance. And then we get a lower low shock horror. It's the selling climax. we get the rally, the automatic rally as it's called in Wyckoff. Okay, so this hits as well. And now I can make this even bigger since we are here. And look how great the first undercut is. The ST in phase B. In gold, if you saw the previous video, we only made the undercut in on the close, not intraday. But here in silver, as you can see, it is so clear we made it intraday and on the close. Perfect. And as you can see, if I pull back the graphic real quick, you see that the support zone and the resistance zone, the red zone called resistance lines here, and then the support lines called green down at the bottom, they're made up by the AR zone and the SCST zone. So let's get back to gold, silver. This is why, to silver, I'm sorry. This is why I have these gray lines in here. So here's the support zone, here's the resistance zone, and we could theoretically put this up here. Doesn't really matter. What really matters is this, the lower high. This is the important one. Because all this first part, even this undercut, this happens in bottoming phases. There's really nothing we can take from it. But now the lower high is in. Also hit perfectly double resistance zone. Didn't even come close to the Wyckoff resistance zone. So now we have the down move 1, preliminary support check 2, selling climax check 3, automatic rally check 4, the ST in phase B, so the secondary test in phase B with a lower low check 5, and the lower high check 6. 6 hits in a row, perfect execution according to the Wyckoff accumulation pattern. Does that mean we now gonna see the undercut and the spring? We don't know. Nobody can look in the future. I don't live in Hogwarts. I mean, I guess it would be cool, but unfortunately, I don't have any magic abilities. So I cannot look in the future. But if we have a pattern that basically is an 8-step pattern, and the first 6 of these 8 steps have played out beautifully, I think we can all agree chances are pretty high that the next 2 will play out as well. And the next 2 would be, here you have it, look at the middle, phase 3, the undercut, the fake out of all fake outs, which does not happen all the time in Wyckoff. This is important. This is the ideal accumulation pattern. The ideal accumulation pattern. And as you just seen, silver's playing out ideal accumulation pattern, 6 hits in a row. And there's one more thing I would like to point out to you. If you look at the graphic, please look in the middle of the graphic, the end of phase B, when phase B goes to phase 3. You see how the price of the underlying is trading in a narrow zone before we get the final undercut that leads to the spring, the fake out of all fake outs. You see this? Well, let's look at silver. Again, here's the graphic. We get the lower high, and then we get this narrow, after the sell-off, we get this narrow, like trading in a tight range, period. And look at silver. This is exactly what has happened. ST in phase B moved to a lower high, and now we're trading this, we're going down and we're trading this tight range. This is textbook Wyckoff. So that would mean we would get the undercut, likely the fake out. Now, I would like to point out that the undercut does not always happen. We're talking about the ideal Wyckoff accumulation pattern. It has all these different phases in it, but not all the time does it have the ST in phase B or the lower high or the undercut. But you just saw the ideal Wyckoff accumulation pattern, and you saw we have 6 hits in a row of the ideal accumulation pattern plus the tightness at the end of phase B before the undercut. I mean, chances are pretty good that we're going to get the undercut. I like our chances. So that would mean we get an undercut, nasty, nasty bear trap. It will fake out all the bulls who gonna lose their stops, their positions. They're gonna panic sell, and the smart money is just gonna buy it all up, and they're gonna laugh because they know what's gonna happen afterwards. You see it here in phase 3, D and E. We go up, we get the retest, meaning we're gonna test, we're gonna go above the support zone, we're gonna retest the support zone, and it holds. Maybe we get a tiny undercut, but we are not making a lower low. We don't go below the spring low. And the spring, that's why it's called the spring. It's a springboard for the next rally phase. We're off to the races. So if you're more aggressive, as I will be, and I'm not your financial advisor, I'm not telling you that is what you should do. That's what I'll do. I'll buy into the spring. If you want to wait to see if this really plays out, then you wait for the retest. If the retest is successful, now that probably means you're going to miss out on, I mean, hard to say, but I would say between 10 to 20% performance on the mining stocks. But then the probabilities are much higher that we all have seen the end of the Wyckoff accumulation pattern and that things start to turn. So it's a simple trade-off, very typical for the market. Now, how low can the spring go? That's what everybody wants to know. And this is the interesting part with silver. We have 2 very interesting parts with silver when it comes to this. The first part is that, and that we have this dark blue support zone around, it's around $53 to $54. Very close to the Wyckoff support zone. So while it is possible that we just go into the support zone and that's the undercut, that's the fake out, and the spring will be here, I would assume we're going lower. And if we're going lower, then we're talking about the $50, obviously the $50 magic round number that everybody's eyeing. And we know from the market that the market tries to and loves to hit the biggest pain points possible that hurts the most investors. And even more important, when we're talking about distribution from dumb money to smart money, the price point where the smart money can fake out most of the dumb money. You see this, if you're familiar with options, then you see this in the option markets all the time. So that means if everybody is at $50 an ounce in silver with their buying orders for silver and wants to buy their mining stocks once we're at $50 silver, there's no way we're going to $50 silver. We're either going to get an undercut below 50, or we're going to stop, which is what I've been saying and thinking for a while. We're going to stop before we get to 50, maybe at 52 or 51, because that means we get all the selling from making a new low, right, by dropping below the Wyckoff accumulation support zone, and all the stops and liquidations and panic selling by dropping below this dark blue support zone. But, and let me draw this in here real quick for you. So 50 is about here. And we're gonna do this baby blue. There we go. So, oops, it's a little, this guy, sorry, the support signal is a little drunk. So we're gonna get all this, the additional selling and liquidation by dropping below this support zone, but we're not going down to 50 where all the buying orders are and where everybody wants to buy. And we're gonna turn before that. And then, you know, we just talked about it, what according to Wyckoff is gonna happen. And now let me extend this here for a second and draw in what this would look like for silver. So here we go. And this is what it would look like. So sell off, preliminary support, check, rally, doink, check, selling climates, check, automatic rally, check, ST in phase B, check, lower high, check. In this case, even perfectly, tightness, check. Then the undercut. And I'm gonna draw it in like this. I mean, we don't know exactly when the phase is gonna end, right? Let's say it's gonna end here. Go back up, doink off this resistance zone, retest, and then we're off to the races, simplifying it. So this is what it would look like. And as you can see, everything up to here on the left side has played out in, I mean, pretty close to perfection. I guess nothing is perfect, but pretty close to perfection, as perfect as it gets in the market. The question is, are we getting the right side? Right now, based on this, we have to say the probabilities are in favor of an ideal playing out of an ideal Wyckoff accumulation pattern, which would mean a lower low is coming in silver, and that's the spring, and that's the final sell off in silver. So what does that mean? That means, since we're talking about the middle of this graphic right now, don't have your stops too tight. Or if you do, which is fine, then you be willing to buy back quickly when the undercut is happening, if you believe it's a Wyckoff accumulation pattern. Again, I'm not your financial advisor. I'm not telling you what to do. The sell-off, the final sell-off, probably going to be vicious and short. And if we know anything from the past, going to be happening in Asian trading. Now, in this case, if we get an undercut like this, probably we're going to get sell-off in Asia, probably continued in Europe a little bit because it's waiting what the US does. And then we got going to get some fast selling in the US. And that should be the end of it. So that means you either need to be in front of your laptop or your smartphone when that happens and act quickly. Most of you won't have the time for that. You got better things to do in life. Fair enough. Or you put in buy orders. You're not going to hit all the lows for all the mining stocks you want to buy or for silver. So you can put in buy orders at different levels. So you're going to hit some mining stocks maybe a little earlier, but then you have buy orders for some that are a little lower, that then you might get a really good entrance, or you're going to get the first ones, you're going to miss the second ones, but then you can buy those on the retest. And that's exactly what I'm going to do. If you like this content, if you want to be ahead of the markets, hit the subscribe button real quick so you don't miss videos like this, like the one that we did for the Wyckoff accumulation pattern last week for gold. Go back and watch that. You can also learn some more about the Wyckoff patterns. I explained a little more detail there as well. So that is it for today, ladies and gentlemen. We're going to have to wait and see what happens now. Again, that the undercut may not happen is not necessarily a sign that this accumulation pattern is not happening. This is just the ideal way how it would play out. And so far in silver, we have seen the absolute ideal way of a Wyckoff accumulation pattern. If you think it in real simple macro terms, it makes absolute sense that the smart money is accumulating all the silver it can and is trying to push the dump money out of their positions to buy them. We see us tomorrow. Have a great day. Bye-bye.